Welcome back to the channel. In today's video, let's dive right straight into the point and talk about 3 SPAC stocks to buy in March 2021. Starting with SPAC stock number 1 is the trending SPAC stock Experience Investment Corp under the ticker symbol EXPC that's highly favored by none other than ARK Invest. If you have not heard of this stock, then you should be extremely glad that you did today because ARK Invest do not usually buy SPAC stock except for this one few exception. Aside from ARK Invest, this stock currently has around 63% institutional ownership, which brings the extra confidence to me as a fellow investor. Now you must be wondering who they are merging with and what's so special about this merger that makes institutional investors want to invest in this. To begin with, EXPC will merge with a $900 million small aviation tech company otherwise known as Blade Urban Air Mobility that has the potential to become Uber, not in the land but in the sky, for air travel. Similar to Uber, this company at its heart is a technology company that gets a bunch of aviation vehicles that can get people from point A to point B through helicopter at a much reduced time and hassle. Blade do not actually own any of this aviation vehicle, but instead they buy aircraft time by the hour from the operators, covering all costs associated with flights. You can say that they are sort of the middleman where they bridge the gap between aviation operators and customers with their smart payment packaging plan. Currently they have 4 business lines that are short distance, Blade Airport, Blade Medi Mobility, and International Joint Venture. The short distance segment covers between 60 to 100 miles flight, priced between $595 to $795 per seat or $295 for a monthly commuter pass. And then they also have Blade Airport that essentially covers areas in the New York City, mainly from Manhattan to or from JFK, LGA, and EWR, with prices starting at $195 per seat or $95 per seat with annual pass. Then they also have Blade Medi Mobility, which serves as a human organ transporter for northeastern region in the US that requires high importance. And then lastly, they have also the business segment being the International Joint Venture, providing urban air mobility service in key overseas markets such as India. Now if you think about it, this idea has obviously yet to turn into a norm yet. Well, at least not to the extent that will allow us to see hundreds of helicopters on the air right now, and that's because helicopters in general creates a lot of noise pollution and they're extremely expensive to operate and maintain. But this is where the next generation of aviation vehicle called Electric Vertical Takeoff and Landing, short for eVTOL aircraft, comes in. After all, Boeing, Airbus, Joby Aviation, Bell, and a couple of other companies have thrown in billions of dollars investment in this next generation aircraft. Over time, they will collectively lead the way in a new era of urban air mobility, at which point cities will be filled with eVTOL aircraft taking people all over the city. And especially considering that the urban air mobility market is expected to reach $125 billion by the year of 2025 and to $650 billion over the next 10 years, it's really not difficult to see why institutional investors are favoring this stock a lot. Because if you combine the eVTOL, Blade vast network of private terminals which spans across the country and the passenger base that has swelled from 1,000 passengers in 2014 to over 37,000 last year, and the total addressable market, is highly likely that Blade is going to turn out a winner over the next decade in its respective industry. So at the moment, I think anywhere around $17 range still remains undervalued in my opinion, as I believe this stock can hit 10x in the next few years. Before I move to SPAC stock number 2, be sure to hit the thumbs up button so that this video can reach to a brand new audience. It will really make a huge difference to my video. Next up, SPAC stock number 2 is Gate Capital 3 under the ticker symbol GIK. At the point of this video, GIK is trading at $13, and like EXPC style, Gate Capital 3 already have a definite agreement and will complete the merger by March 2021. What I'm talking about is a very promising EV company that already has a wide range of massive partnership in hand that make this company fundamentally one of the best in comparison with its other notable peers like Nikola, XL Fleet, Hyliion in the zero emission commercial vehicle space. At the very core, Lightning eMotor is a pure electrification solution for urban commercial fleets, founded in 2008, providing from commercial battery electric and fuel cell electric vehicles, powertrains, fleet analytics, and charging solutions. This company not only sells its vehicles and offers solutions to improve vehicle efficiency through fleet analytics, but actually manufacture its own zero-emission vehicles. Up to date, Lightning eMotors are highly focused on the $67 billion total addressable medium-duty market, serving from Class 3 vehicles all the way to Class 7 vehicles. This includes passenger van, cargo van, school bus, ambulance, and RV configuration. What's even better is the fact that they already have 120 vehicles on the road and have 1,500 already on order from those customers who have now followed up with their significant orders, with them bringing 150 million backlog that more than covers the whole of 2021, selling 3 times more than its next largest competitor. This includes Amazon, DHL, CBRE, Praxair, Winnebago, and Cox Enterprises, and many more. Plus, this company is already certified by CARB, short for California Air Resource Board, for 6 of their platforms. Basically, this is actually very important and required by law, not only for California but also other 15 states, which you have to go through a long and multiple process to get certified. They are also involved in partnership with a list of names like Plug Power, Ford, ABC Company, Romeo Power, Brock Warner, and BP to develop innovative truck. Now obviously I can keep going on and talk about the list of customers and partnership, but at the same time we want to be sure to take account into their revenue projection. Lightning eMotors believe that they can reach annual production of 20,000 medium-duty commercial vehicles by 2025, bringing revenue from $9 million in 2020 today to $354 million over the next 2 years, and then $2 billion in 2025. To be honest, these figures are quite conservative in my opinion. I mean, look at this. A Colorado company could play a big role in replacing the federal government fleet of cars and trucks with electric vehicles. Therefore, if you take this winning attribute and combine with their current customer base and certified ready CARB, to that end, it further justifies my bullish argument. Overall, at a current valuation of $651 million pro forma enterprise value and $273 million cash to the balance sheet after the merger, this company remains undervalued in my opinion. As long as Lightning eMotors can continue to innovate and take advantage of the huge market with their early mover advantage, I believe that this stock is ready to soar. Anyway, if you're interested for more in-depth research about Lightning eMotors, feel free to check out the video provided over here. Moving on to SPAC stock number 3 is Thunderbridge 2 Corp under the ticker symbol THBR. This merger will have the newly combined company taking on the Indie Semiconductor, changing from THBR to INDI as early in this first quarter of 2021. At the point of this video, THBR is trading at only $11, making this SPAC still somewhat a bargain buy considering that they will merge sometime around March, which is less than 4 weeks closing in. Essentially, Indie is an auto tech revolution with next generation automotive semiconductor and software platforms. They are highly focused on edge sensors for advanced driver assistance systems, including LiDAR, connected car, user experience, and electrification application. So high chance your EV wireless charging, cabin lighting, Apple CarPlay, and charging controllers are actually designed by Indie Semiconductor. Through these 4 types of automotive application, Indie Automotive Semiconductor portfolio addresses $16 billion market, which is expected to exceed $38 billion by 2025, driven by the strong demand for silicon and software content in automobiles. Vehicles today have around $310 in silicon content per vehicle, and in the future, that total could rise to more than $4,000 per vehicle, which creates a strong demand for Indie Semiconductor. From 2020 to 2025, Indie sees revenue growing at a compound annual growth rate of 85%. Over 60% aggregate revenue through 2025 is already at the shipping or one stage for the company. So they are definitely in a strong unique position that you will not find in most companies out there. Up to date, Indie Semiconductor has shipped over 100 million units to Tier 1 automotive suppliers globally, such as Apple CarPlay, wireless charging, and cabin lighting. At the moment, the Indie's mixed signal system on a chip SoC solution are currently on the 12th Tier 1 approved vendor list, including top companies like Magna International and Aptiv, contributing to a strategic backlog position of more than $2 billion defined as projected revenues based on existing contracts, design, and historic production trends. And that's why I'm liking Indie Semiconductor a lot, because not only have they shipped over 100 million units, but they also have more than $2 billion backlogs, along with a $2.5 billion in potential pipeline contracts. So this is actually a very interesting business opportunity for you to get before this stock gains some serious traction. Overall, I believe that indie Semiconductor at somewhere around $11 is still undervalued based on the projected 2025 revenue and EBITDA multiples of 2 times and 6.4 times respectively, implying an equity value of $1.4 billion. I think the strong demand for silicon and software inside automobiles served as a strong catalyst to skyrocket in this growth. Long term, it has huge upside potential, and as the merger is closing sometime in March, I see an opportunity to make money in the near term. Well, that's all I have for this video. As always, please hit the thumbs up button so that this video can reach to a brand new audience, and be sure to subscribe for a new future video if you want to learn and watch more on my elaborated stock research. Till next time.